I don't buy just dirt. I buy a business. And I think that's one of the things, if I can, that we miss in this space is people focus on buying, on the cap rate, and they focus on the appraisal of the land, which are all very important, all parts of the formula. But what you're not really buying a piece of dirt, or you're not buying buildings, you're buying a business.
Yeah, I totally agree.
Yeah.
Going back, rewinding to when you first got into real estate, 'cause we have listeners that tune in that are wanting to get in, break into real estate, break into commercial real estate.
Yeah.
Let's talk about your first deal and then how that became really the triage to move forward into bigger deals.
Well, you're talking about like when I was 17 years old.
Yeah. Host Josh Appleman, founder and CEO of Appleman Properties. Today we are joined with Paul Montalango. I hope I got that right. Paul's
You got it.
Perfect. Paul's
Montelongo.
a seasoned investor and entrepreneur, managing a vast portfolio and assets valued at approximately 49 million. With 40 years of experience, he has built 8 successful businesses and is based in San Antonio, Texas. Paul, we're excited to have you on today. If you could, let the listeners know a little bit more about yourself.
That's great. Thanks, Josh. Yeah, I've been in real estate since I was 17 years old. I bought my first piece of property at 17 years old. My father told me, go buy real estate, although he never had any. And so I bought a piece of residential dirt. I thought I was going to build a house on it at 17 years and sell it. At 17 years old, I didn't know how to do that. So 2 years later, I flipped the land. I bought it for 7,500. I sold it for 15,000. I doubled my money, and I did the first thing that you're supposed to do with a windfall like that. I bought a truck and a motorcycle.
Nice.
At 19. So then I started flipping houses and doing cash flow and buying small commercial, and I did that for many years. And then in about 10 years ago, I started buying multi-unit properties. My first investment was a marina and RV park in North Carolina. 115 boat slips, 38 tiny home. I took the RV park and converted it to tiny home nightly rental, became an Airbnb super host. So that was 115 units, 38 tiny homes. So that's 153 units. At one point, I had 13 streams of revenue on that piece of property. So then after that, I started buying apartments and investing in apartments. And so I've cycled three of those. I've done 13 now. So that's where I am. Yeah.
That's incredible. And I like how you started with essentially a piece of dirt and then grew it to where you're at. On the you've got some exciting things to talk about. On the RV conversion to mini homes, you've already got water, sewage, electric already on every pad. So is it just tapping into what's already there to hook up
No,
the
I
tiny
actually
home?
on that particular project, I had to do the infrastructure. I have a very extensive background in construction. I had a building company, remodeling company, a home building company, insurance restoration company for many years, for I don't know, 25 years or so. So I have a real extensive construction background. But anyway, on that particular track, we had to put in the infrastructure to be able to support those tiny homes. Yeah. But we had I had the tiny homes built off site. So they were built by a company in Virginia, and then I had them delivered down to North Carolina.
Yeah.
And we outfitted them and we would rent them by the night. Yeah.
It was all modular. Just came in on tractor trailers and set them in place and get everything built out. That's
18-wheeler brought them in,
yeah.
set them up, hurricane strapped them down, built a skirt, some decks, furnished them, put them on Airbnb.
So do you still have that property, or have you exited?
No. I exited it. Yeah.
What was that like? Was it a good clean exit? Was it to a hedge fund?
No, I had 2 other partners, and I sold my piece to them.
Okay.
So because I was moving back to Texas, I lived over there for 2 years to accomplish that, to do that. And I wanted to move back to Texas where my family was. So it made sense for me to sell my portion of it. Yeah.
What were the streams of revenue?
Oh my, let me see. So there was Airbnb, there was it was a membership, there was the marina slips, there was a boat club, there was boat rentals, there was some warehouse with storage, there were events,
Wow.
And I held a couple of times. I held a motorcycle rally there, and so just there was a little C store in it, that sort of thing. So, uh,
Little town on its own.
yeah, it was a beautiful thing, and every day I got to go to work at the lake. So,
Yeah.
in in my shorts and flip flops, that was the best part.
It's the gift that kept on giving. So no matter what, it's just kicking off cash flow
Yeah,
on just different value add strategies.
yeah,
That's
right. So then, the fortunate thing for me was the two gentlemen that I was in the deal with. They became mentors to me because they had done this sort of thing, these multi-unit properties, and so then they provided mentorship to me and helped me get into other deals. And in fact, I'm still involved in a couple of deals with one of them, and I went on to do a couple of more deals with another one. So, it turned out to be a good thing. But I was like a sponge, I just they raised the money, and I'm like, how in the hell did you do that? And so then they taught me how to do that. And now I'm the KP on my deals, and the lead, and I still partner. Obviously, I think you have to in this business, but I've been able to just inch along and get to a point where um, you know, the portfolio is growing, and we've been putting in new offers and on bigger deals, right?
yeah.
Because now we have the infrastructure to do it, and we've got all the moving parts to do it. So it just makes sense to continue to grow. And we're looking at other types of investing. For example, I'm building um, a 420 unit self storage
Nice.
facility from the ground up, brand new, and we'll put a shovel in the ground this fall on it. We're about, I'd say we're about 90 or about 80% through the design and engineering and permitting phases. So we'll put a shovel in the ground. That'll be a year to build that, and then it'll take a couple of years to stabilize it.
Yeah.
And then we have some options, which I think, if I can get into this, I think that in our business, we need options on our properties and on our assets. So
Yeah.
we have options to refinance and pay off investors and keep it. We have options to sell it outright. We have options. We're saving 2.5 acres in the back to do a phase two. So that's
Yeah.
another option. So on this particular asset, I've got maybe 4 or 5 different exit strategy options that I can put in place if I have to. And when I take a look at buying an apartment complex or buying a multi-unit space, I like the options.
Yeah.
And so I don't buy just dirt, I buy a business. And I think that's one of the things, if I can, that we miss in this space is people focus on buying on the cap rate, and they focus on the appraisal of the land, which are all very important, all parts of the formula. But what you're not really buying a piece of dirt, or you're not buying buildings, you're buying a business.
Hmm.
And so you're buying all the problems of that business, and you're buying all the successes of that business. You're buying the personnel, you're buying the customers, the tenants, you're buying the good marketing, the bad marketing, you're buying the good property management, the bad property management, you're buying all the streams of revenue. And then it's our job to put our imprint on that business. And, I've had eight, 8 or 9 very successful businesses um, through the course of my career, generating close to $100 million in revenue. So I have a little different mindset when I approach a property. It's that I'm buying a business, and that's why we're not stuck on just buying apartment complexes. We'll do other kinds of
Yeah.
assets because, again, I'm buying a business.
Yeah, well, we definitely share a lot of synergies. You and I's insurance restoration business, having crews, project managers, the transactional side, buying the business, because essentially everything that we do buy is a business, and how can we add
Absolutely.
value to it is you're squeezing the expenses down, you're putting better management in place, refreshing the property, making it more valuable through even adding amenities, adding different things that it doesn't have. And knowing to going through the entitlement process to permitting, working with engineering architects to get a project from nothing to something is it puts us in a different caliber to where we can go into a property and see things that might be an issue by knowing what wasn't there before, kind of seeing behind the walls. You're able to identify issues before they become a bigger problem, I feel. Um,
Yeah,
It's
well,
better.
the bigger picture for me is that it's a specific design to a specific demographic in a specific market for a specific product.
Yeah.
So we had feasibility studies done
Yeah.
so that we would know the unit mix, we would know the rates we could charge, we would know the design and so forth. So it's custom, it's customized to the area. So that's to me that was really, and with my extensive building background, that was really fun. It is fun to go through that whole process, working with all these parts and pieces to put it together to have a customizable product. And that's the benefit of that. And because I spent the last 10 years buying existing product,
Yeah.
right? Existing businesses. And so to start this from the ground up has been really cool because it takes me back to, a lot of my foundation,
Yeah.
and we're actively in search of other dirt to be able to do it again because it's been such an enjoyable process, and we see the benefits,
Yeah.
money wise, profitability wise.
Yeah. It's brand new. 20 years from now, it's going to be 20 years old instead of 70 or 80 years old. And feasibility study, I mean, that eliminates really any risk to the project because you're giving the community what it needs, not what you want or what you think it needs. It truly identifies gaps in the local economies that you're able to fulfill.
And it supports your idea, your business plan to
Yeah.
lenders, to prospective investors, to prospective partners, to everybody in the business community in there. So it's very it's been very good to do that.
Developments have a delayed gratification, and there's a lot of it serves a different niche of an investor who's willing to deploy capital, because a lot of investors don't want that delay of 1, 2, 3 years to even see a return or see any kind of cash come back. But once it's done, once it's kicking off cash flow, it's been leased up, then it becomes very fun. And a lot of people missed out on a brand new asset, but it serves a different type of investor.
I agree.
Um,
Yeah,
it's
and we're seeing that right now with the economy in the state that it's in, and the uncertainty of debt and financing. We're seeing that some investors are a little hesitant to park their money in some of the things that we've been pushing the last 3 or 4 years as an industry, the multifamily industry. So we're giving our investors different options because they're asking for it, and some of those options are actually more viable at this moment than say maybe 3 or 4 years ago.
Yeah, I totally agree.
Yeah.
Going back, rewinding to when you first got into real estate. So we have listeners that tune in that are wanting to get in, break into real estate, break into commercial real estate.
Yeah.
Let's talk about your first deal and then how that became really the triage to move forward into bigger deals.
Well, you're talking about like when I was 17 years old.
Yeah, whatever you start.
Yeah.
Everyone starts at a
Which, by
point,
the
and
way, it
then
was just a few years ago.
yeah,
Anyway.
it works.
No, like I said, my family came from very humble beginnings, and my father, we have a real estate family now, and my father just said, you need to buy real estate, and it clicked. I don't know why. I just, that's when your father tells you something and you respect your father, I guess you do it. So I worked in the summers and I did the things that we all did. I mowed grass and raked leaves and washed cars and did all that stuff, and saved my pennies. And I was able to scrape together $7,500.
Yeah.
And so I found a piece of property and I invested in it. And like I said, it was just a little pie-shaped piece of land in a cul-de-sac. I don't even know if it was an eighth of an acre or whatever. I don't even, it was just real tiny. So funny, I went back there maybe last year. I would just happen to be in the area and I looked at it and there's houses everywhere, and it's unrecognizable,
It was on a path of progress at one point.
Oh, of course, pardon me. But I didn't know. I just was told to do this. So the key though, I think, was that, and I've discovered this in my personality and in my career, is that I kind of get an idea and then I just dive into the pool and I teach myself to swim.
Yeah.
And, I learned to swim, let's say that. So that was an instance where I just dove into the pool and learned how to swim. And then after that, I bought a house, and then I bought the house across the street. And then then it just continued while I was doing my construction work and my insurance restoration work, those kinds of things. So just a lifetime of real estate and construction and then for about 10 years I went on the professional speaking circuit, and then I taught real estate sales, marketing, management, and I taught it to real estate groups and insurance groups and plumbing groups and electrical groups and anything construction or real estate related. I was on that circuit for 10 years and thoroughly enjoyed that, and because I got to teach it. And so the teaching was very fulfilling. Yeah. So
Yeah, I think teaching forces us to learn a little bit more. We already go a mile deep, but it forces us to go a mile and a half deep on a subject, because now you're teaching it to others, and it's interesting how it works.
well, you feel responsible
Yeah.
also. Like if I'm going to tell you, at least I did, like if I'm going to tell you, go do this, I would either have to have done it or am willing to do it immediately. So I felt a great sense of responsibility there, to be authentic in what I was teaching. Yeah.
Yeah. And then on the first deal, taking action, just taking the steps, the initiative, take action, and then even learning the back end of the business, the what goes through title work, working with the banks, getting through to the closing table, and then executing on your business plan, whatever that may be on certain properties. Can you talk to us a little bit about a business plan that you've executed on that was maybe the biggest challenging one? Every property requires a different one.
Yeah, everyone. Well, that marina project was pretty challenging.
That's huge.
I had never done anything like that. But I will tell you this. Well, let me answer your question. So yes, that marina project was very challenging because there were a lot of moving parts to it. There was water involved. I had never owned a boat before. I still have never owned a boat, but one day I woke up and I had 115 boats. Right. So I had no clue about the force that water can impact your property, right? So there were a lot of moving parts there, and so that was challenging and rewarding from the challenges as well. But I have this philosophy that I didn't start with this philosophy. I've learned this philosophy in retrospect, and that is everything that I have done has prepared me for the next thing. So when I bought that first little piece of property, that prepared me to buy the little 1,000 square foot house that I bought a year later, and that prepared me to do such and such. So everything that I've done in my life, experience wise, has prepared me for where I am today. And the things that I'm doing today, we're really stretching outside the box right now. Myself and our team and the people that are around us, we put in $90 million worth of offers this week alone. Nice. So that's a huge stretch. And but everything that I've done up to yesterday has prepared me for today to be able to handle that, or to learn from it, or at least to know who to speak with and who to talk to and who to listen to and who to ask for mentorship to help me do that next thing. And so if we're lucky enough to land those, $90 million worth of